Good morning. It's Monday, May 6th, about 6 a.m. Central Time. Overnight, the precious metals are playing catch-up after Friday's lagging performance. Last week, we saw the employment report sending stocks flying higher while bond yields had retreated. Take a look at that two-year Treasury yield chart. You're going to see a big sell-off here and a big rejection from 5% heading lower. So the U.S. economy added 175,000 jobs in April compared to 315,000 in March. The expectations were for 235,000, so a significant miss. Meanwhile, the unemployment rate rose to 3.9% from 3.8% in the previous month. We also saw wage growth, which a lot of people are focused on. That slowed as well. That oftentimes becomes a leading indicator of inflation and other things, a hotter economy. We want to see that come down just a bit. So a lot of those cushy salaries, a lot of those tech jobs are starting to reset here, and we're getting some lower bases as far as salaries are concerned. So it slowed from 0.2 from 0.3 in March. So these numbers were cool enough to bring back interest rate cuts and kind of bring them back into perspective a little bit, with them factoring about 2 interest rate cuts towards the back half of the year. Now, gold and silver really lagged, and it seemed like they had a rug pulled out from underneath them, as a lot of these particular analysts out there and these big high-profile people that work closely with the Fed are saying that the Fed wasn't really concerned about this weaker jobs report, and that there's another jobs report to be had before the next Fed meeting. And once that statement was released to the Wall Street Journal, we saw gold futures pull back on that. So many of you were able to go out there and add to your positions, and fantastic job as we got a strong recovery here in the overnight session. So tonight we will see no major U.S. economic data. However, we will have 2 Fed speakers, Fed Speaker Williams and also Barkin, speak during the trading hours. So I believe the Fed is going to react way too late on this here, given that we've seen weakness in the payroll data, the services PMI, GDP, and they've all softened lately. So looking at other markets here, crude oil futures may have bottoms, so tough picking bottoms here. We leave that for proctologists, but they may have bottomed as Israel is preparing to launch an attack on the southern city of Rafah. So look at a daily chart on that crude oil, kind of bouncing off that $78 level and starting to work their way back up here. So looking at the S&P 500, that's been really firm here ever since that jobs number came out. The key pocket support you're going to want to look at today is kind of 51.50 down to 51.30. I think that's kind of like the bull bear line at the moment. You'll see some kind of, if we break below 51.30, you'll see support at 5100, and then only a close below that 51.30 could really lead to that bigger washout. Otherwise, we stay above 51.50, 51.60. It puts that 52.10 back in the card. So from this perspective right here, tough to attack it from the downside. You want to look for this bullish momentum, see if it can come and we can capitulate again back over 5200 before attacking that one back to the downside. Now shifting to the metals, gold and silver have continued to demonstrate significant volatility recently, given that gold has one of the largest specs and fund holdings in over the last 2 years. So you get all the people piled in there and they tend to exit at once, and a lot of people don't really care about gold or silver long-term fundamentals. They just want to be where the action's at, and that's where the action's at right now. So gold, if you look at it, stochastics are rising from oversold territories, which looks nice on the chart the way it's turning back up here, suggesting that the recent sell-off may be coming to an end. And futures will want to see it close above 23.51. We're kind of in no man's land here, given that we have risen about $20 overnight. Really, this 23.50 down to about 2300, we've been trapped in that kind of range here. So if we can close over 23.50, I think we could threaten for a move back up to 2400. If we break below 2280, it's going to be that 50-day moving average, which is 2259. So similar scenario in the silver market, also rising. But if you look at silver, it hasn't been as robust. So at 85-1 on the gold-silver ratio, silver is up 70 cents, which looks lovely. Gold up $20, but in reality, silver's got a lot more room to move higher here, in my opinion. So we need to see a move over $27.93. That'll open up the door for that threat at $29, $29.90, $30 bull bear line, and then you get all the crazies are going to come in and buy the crap out of it, try and push it up to 35. That's just my opinion. So your support level here, 26.39 down to 26.21. That's the 50-day moving average. So if you look that it's kind of hooked down and the 50 days coming up, so it's real tight pocket support there. Don't want to see a move below the 50-day moving average. Party could be over here, and you'll just be in the accumulation phase for the next time we go through all this nonsense. So you got any questions, give me a call. I'd love to work with you over here. We've got a full service futures commodity brokerage firm. We've got self-directed accounts. We do have a wealth management side, which we do allocate commodity exposure to on the stock side here, and we'll own things like uranium, silver, gold miners, energy exploration, things like that, on top of all your magnificent 7 in your diversified basket of different stocks. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.